This is Alan Bush with the Daily Financial Forecast for Thursday, September 21st. Stock index futures declined yesterday afternoon with follow through today due to the hawkish tone to the Federal Open Market Committee statement. Fed officials voted to hold interest rates steady at a 22-year high, but signaled that they are prepared to hike rates one more time this year to combat inflation. Fed Chair Powell indicated that the central bank is close to finishing raising interest rates, but borrowing costs must remain higher for longer as the economy continues to hold up. This morning, we are seeing economic reports mixed. Stock index future, I believe, will probably have a difficult time advancing in light of the hawkish Fed, U.S. labor strike activity, and debt ceiling issues. In the currency markets, the dollar index quickly advancing yesterday with follow-through strength today in light of the Fed's committee statement. This bullish influence of the ongoing hawkish Fed more than offset the undermining influences of the U.S. labor strike activity and debt ceiling issues. So in the longer term, interest rate differential expectations remain favorable to the greenback, especially against the European economies, since the U.S. economy appears to be holding up relatively well compared to economies elsewhere, especially in Europe. Also, we had the pound falling to a 6-month low. This after the Bank of England at its policy meeting today held its key rate unchanged. This is the first pause in policy tightening in almost 2 years from the Bank of England. And the Swiss franc falling to a 2-month low after the Swiss National Bank unexpectedly held its key rate unchanged, ending its tightening cycle. Tomorrow we'll have the Bank of Japan with their policy meeting, and most likely they will keep their rates unchanged at negative 10 basis points. And in the interest rate futures markets, futures under pressure yesterday, follow through weakness today. This in light of the Fed statement from yesterday. Right now, it looks that with what the Fed is saying, that they believe that there could be one more rate hike. However, financial futures markets are saying that there is only a 30% chance that the Fed can hike its key rate by 25 basis point at its November 1st policy meeting. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.